Hi, good afternoon. This is the Centerfin Collective weekly update for the week ending March 1st, 2024. It was a busy week, lots of things happening. We figured, as we do every week, we'd highlight a handful of things that we felt like were interesting in terms of developments in the market that we wanted to highlight for your attention. And so, starting with Bitcoin this week, Bitcoin, if you guys are following the market, reached near all-time highs, traded through 63,000 this week. It's taken up all of the other cryptocurrencies alongside it, but Bitcoin is the one we really follow and track because we do think that it has a use case as a digital gold. Maybe not surprisingly, gold itself is trading at near all-time highs as well. It's over $2,000 an ounce, which it's been in that price context for a while now. But Bitcoin surged, we think, largely on demand from the new ETF players. So we've discussed this in the past. We feel like these ETF approvals that have only less than 2 months ago are potentially a big driver of Bitcoin's price going forward. And the reason is simply supply and demand. So there's a very limited amount of Bitcoin outstanding. So as you guys who follow along this market, there's 21 million Bitcoins that can ever be mined. A large amount of that float, as we've discussed in the past, is held by kind of original hands, old school Bitcoin people that really sell their Bitcoin. And the estimates are somewhere in the neighborhood of 50 to 60% of the float of Bitcoin is held by those types of holders. And so they're not the ones that are going to sell their Bitcoin to the ETFs. So the ETFs have to go out and find new sources of Bitcoin. And there's only so much Bitcoin that's being mined on a daily basis. And that amount of new supply coming to market is going to decrease by half in sometime in either late March or early April, and that's called the halving, which happens roughly every 4 years or so. And so that's a big event that's coming up, and that is, we think, part of what's driving the price. And just to give you a sense of numbers, when the gold ETF GLD was launched, I think it was back in 2003, it took it 2 years to reach $10 billion of assets. Just one of the Bitcoin ETFs, the BlackRock one, IBIT, reached $10 billion of assets in about 7 weeks. It's a pretty crazy number. It's larger. I think expectations were for all of the Bitcoin ETFs for all of 2024, once they were approved, to get to $10 billion. And we've gotten to $10 billion in one ETF in 7 weeks. So it's pretty incredible development. And so we think that this supply and demand imbalance is what's driving the price of Bitcoin, and we would expect that to continue at least in the near future. It's a volatile asset, as we've always spoken about before. It's volatile to the upside, it's volatile to the downside. And so people should understand that if they're following the space. Nevertheless, it's a very positive development. And one of the other things that we heard this week, which is related to this, is when the ETFs got approved, a lot of the broker dealers that historically allow for trading of ETFs, whether it be for individuals or for ourselves, an intermediary, a financial intermediary, an RIA that manages money on behalf of individuals, or other intermediaries that manage money on behalf of institutions. A lot of the brokers just didn't approve those Bitcoin ETFs, even though the SEC approved them. And so that hampered a little bit in terms of your ability to access Bitcoin. But this week, based on, we think, the price move, two big brokers, Wells Fargo and Morgan Stanley, both approved the Bitcoin ETFs to be able to be traded on their broker dealers. We think that's obviously positive because, again, it opens up other avenues for people to get exposure to Bitcoin. And another thing that may be related, maybe not related, debatable, but the CEO of Vanguard famously said that they would not ever allow for these Bitcoin ETFs to be traded on Vanguard. This is very much in line with how Vanguard operates. They don't believe that any of these financial products that do not have a cash flow component to them, stocks and bonds you're obviously buying the share of a company and its cash flows and profits in the future. With bonds, you're buying a debt instrument that has a coupon attached to it. Gold, Bitcoin, it doesn't fit into the construct. And so they philosophically oppose these kinds of products. And so they famously said they would not approve this on the Vanguard platform, which is obviously one of the largest asset managers in the world. The CEO this week announced that he would be stepping down at the end of this year. Again, some people think it's related to this. Some people think it's unrelated to this, but he's not that old. We'll figure it out at some point. But these are all really positive developments for the asset. We expect, again, for the supply-demand imbalance to continue to drive the price higher, at least in the near term. There will be volatility, but it's certainly an important thing to pay attention to in our view. The other thing, not maybe as exciting, but an interesting development that maybe is a highlight of certain trends, Macy's, one of the oldest retailers in the US, announced they would be closing about 30% of their stores or their physical brick and mortar stores as a part of a restructuring plan. Their goal is to refocus their efforts on their digital offering, all their websites that they operate, and some of their premium product retail brands like Bloomingdale's and Bluemercury. Bloomingdale's obviously is a higher end retailer that they own and operate, and then Bluemercury is a specialty retailer that focuses on skincare and beauty, which has been very popular amongst teens that I happen to know with two preteen girls in the house. That's something they're designed to refocus on. We think this means that this was really just a restart of a trend that's been going on since pre-COVID, right? Retail has been moving from physical, so from atoms to digital or bits. That is a trend that is happening across industries. Retail is not one to avoid that trend. And we think it's basically you had the COVID stimulus that really distorted a lot of these trends, both on the upside and the downside, depending on where we were in the pandemic crisis. But we think that this trend will continue, and we think that this is an example of that. So expect to see other traditional brick and mortar retailers to experience the same thing. And just clarify, same-store sales for Macy's have continued to decline. And despite inflation and the fact that the price of goods have continued to be higher in price than they were in the past, sales have been down, which just means that the brick and mortar model is struggling with the headwinds of digital. And the last thing we wanted to highlight, which we think is also interesting, is Elon Musk, obviously one of the richest people in the world, the founder of Tesla, the founder of Solar City, the founder of SpaceX, and now the owner of Twitter. He sued OpenAI, which is the company that is behind the very popular kind of first mover in the latest artificial intelligence movement. Large language models, as we've talked about before, we think are a defining, potentially really groundbreaking technology that will change the way that the world works. And the reason it's important is because Musk was one of the original benefactors behind OpenAI. When OpenAI was first founded in 2015, it was founded as a not-for-profit. Musk feels strongly that this technology needs to be worked on not for profit, but for the evolvement of society and civilization. And as I'm sure you've read in the press, with some of the drama that's going on behind the CEO, Sam Altman, and the board, the company has chosen to partner with Microsoft in a big way, about half of the company to Microsoft. And I think Musk feels very strongly that this gives one player, a private company, Microsoft, a lot of control and potentially is harmful to the development of this technology going forward. We think this potentially also related to the fact that Musk has started some new AI efforts. He, as part of Twitter, launched something called Grok that was fairly recent. I think there's an AI kind of component within Tesla that he's been working on as well. And so this may be a way for Musk to attempt to hamper OpenAI, ChatGPT, as he builds his own solution in the vision that he has. And so those are three things that we wanted to highlight for you this week. Again, Bitcoin breaking out to near all-time highs, we think is very important to follow. Macy's announcing the closing down of 30% of its brick and mortar locations, we think is another example of the transition of the economy from atoms to bits, from physical to digital. And we think the Elon Musk choosing to sue OpenAI on various grounds is something else to follow, because we've yet to really see what his AI products look like. But obviously, he's not happy with how OpenAI has conducted itself in this new artificial intelligence space, and he wants to bring to the market his vision of what that looks like. Things to keep in mind as we move forward. Next week's a little bit lighter on news, but we will see how things evolve. And as always, feel free to reach out to us to discuss any of this in more detail. We are here to foster a conversation, and we look forward to speaking to all of you.